Ladies and gentlemen, today I'm going to be going over the stock of a company called Medifast. Ticker symbol is MED. Now, Medifast is down 41% year to date, and through its subsidiaries, it manufactures and distributes weight loss management, healthy living products, consumable health and nutrition products in the United States and Asia Pacific. The company offers bars, bites, pretzels, puffs, cereal, crunch, drinks, and hearty choices. Oatmeal, pancakes, pudding, soft serve, shakes, smoothies, soft bakes, and soups. Yes. So I have some ideas of why the stock is down so much year to date, and we're going to look at some of the financials and a few of the other metrics and determine, is this something we want to get into? Is this something we want to add to the watch list? Or is this something we should avoid altogether? Well, I consider myself to be a value investor, and while I don't currently own shares of Medifast, it is something I'm going to look at today and give you my sort of preliminary thoughts on the stock. So I had a close friend who was looking into getting into Medifast 4 or 5 quarters ago. And if you look at the quarterly trailing 12 months revenue back then, the trend looks a lot different than how it looks right now. At the moment, the revenue seems to be faltering. And while I don't know and I haven't been able to research yet whether or not this drop in revenue has to do with Ozempic, I do think that this does somewhat factor into the drop in the stock price. Think about it. The revenue is going in the wrong direction at the same time Ozempic is on the mind of pretty much everyone in the market. When you have a product that is basically centered around weight loss and then a major disruptor comes into the market and your revenue drops at the same time, it's going to negatively affect your stock price. The story continues with the diluted earnings per share following a similar trend to the revenue, which of course makes sense. As sales decline, profitability will generally follow. Now, there is, of course, the question of, is this just a bump in the road, or has the time for Medifast passed, and are they now just on the road to either stagnation or zero at some point? I think that's probably the most pressing question to answer before considering getting too involved with this stock. The dividend metrics are probably what's attracting attention to this stock at the moment. Because, I mean, look at it. They have almost 10% yield at current prices, and they do have a track record of growth with a payout ratio just above 60%. However, pair that payout ratio with the fact that there has been a decline in the company's earnings. My big concern would be, is this thing just a yield trap at this point? Is this company destined to continue to have enough of a decline in earnings to where they have to consider not only discontinuing the dividend growth, but actually even cutting the dividend? I think that's something you need to consider before you take the plunge on this stock. So there are very few analysts covering Medifast stock, to the point where I would take anything put out by analysts with the grainiest of grains of salt. At the moment, the ones that do cover it have the 12-month price forecast in the low 80s. I'm not sure entirely what they're basing that upon, but I am interested to see where my own projections put me in a DCF calculator. Also worth noting are the three analysts that bother projecting into the future on their earnings and revenue see 2024 as another down year for both revenue and earnings per share, which isn't great, to be honest. By the way, If you're enjoying the video so far, make sure you yell, "Stop pregnant, Zawado," and "Ora, ora, ora," that like button. So, valuing Medifast, as I've mentioned earlier here, it's somewhat of a challenge. Now, I've put some very, very cursory assumptions into this DCF calculator. All right. So, we've assumed 2023 earnings estimates will come to pass since we're almost through 2023. I don't see analysts, even the small number, being too far off about that. We're applying a 12.5% discount rate because, frankly, I think that's got to be the starting point on a company like this, just because there's a lot of risk involved here, in my opinion. I think I would not be surprised if this thing was out of business in 10 years. And, for me, that alone could be enough to just say, you know what, I'm out. But, let's continue with the exercise, okay? So they do have a pretty solid balance sheet. So I'm giving them credit for that tangible book value that they've got on there. And I'm assuming 10 years of 3% EPS decline, okay? Eventually flattening out to 0% decline or growth. So basically saying the business is going to slowly pull back over the next few years and eventually just reach kind of a point of stability and just kind of stay flat from there. Now, if those assumptions came true, you would make about a 12.5% return at prices that are similar to today's, at the $70 mark and below, basically. You could get a 12.5% or slightly better return. But these assumptions have to come true, all right? This could be worse, right? What happens if it's 5% decline? Well, suddenly that's a much different number that we're getting, right? All of a sudden, we don't really have a margin of safety, and we're not going to get a 12.5% return at that rate. And granted, again, I wouldn't be surprised if it was worse than this or went to zero, potentially. Although, hey, if I'm wrong on the other side, and, after 2024, maybe they start to round the corner, maybe they come out with another product that kind of takes off and, gives them a boost. Hey, maybe they start growing at, a decent clip again. And, maybe it never really fully falls off and they just kind of keep posting up that really low single digit growth. Well, any growth at all, pretty much, in this company from here over, the long term, if 10 years from now it's more earnings than it is today, well, then, yeah, you could post up a pretty darn solid return on this. But the problem is it's sort of like flipping a coin at this point, because one, you have their revenue declining, like I mentioned earlier. So sales overall is declining. And I don't know if that's just because maybe one or two of their more popular products maybe was a fad that's falling out of fashion. Or maybe it is because some number of people that were using, Medifast's different products and brands, maybe buying their, lower calorie foods or whatever it is. And suddenly they don't need them anymore because maybe they've switched to Ozempic and feel like that's going to do the heavy lifting for them now. And granted, I think the whole Ozempic thing is probably also likely to pass until it's disrupted in the future, or, it'll continue until it's disrupted in the future, and then something else will supplant it. That's pretty common in this sort of space of weight loss. People are always looking for the next magic bullet to solve the problem for them, instead of just doing the basic fundamentals of increase your physical activity and decrease the amount of garbage calories that you consume. That being said, I'm passing on this one for now, personally. Especially until I know a lot more. And even then, again, since I can really envision this earnings decline continuing for the foreseeable future, and I could even see them being gone in, the next decade, is that really where I want to park my money when I think there are so many better opportunities in the market of businesses that are beaten up on price but probably not going anywhere realistically? That's just my take on it, though. Let me know in the comments down below if you have any Medifast stock, or if you have any insights onto, where the revenue and EPS drops are really coming from. Love to discuss it more. Take it easy, everyone. As I mentioned before, please feel free to drop a comment below if you have more to add to the discussion. Also, consider joining me on Discord. The link is in the description for that, as well as the link to become a channel member if you wish to support my efforts to provide the latest information I have about different stocks.